Saw what the Fed did yesterday. You saw what the president said about what the Fed did yesterday. What do you think should have happened, and what do you think needs to happen?
Well, you know, if you take the coronavirus in isolation, I don't think an interest rate cut is going to do much to get people back into entertainment parks, flying, traveling, staying in hotels. But I think we have to realize that the virus hit on top of an already softening world economy. Before the virus, every major economy was being revised downward. So now the odds of a recession now, with the impact of the virus, whether it be short term or not, I think go up dramatically. The policy that was chosen was monetary policy. So at the same time, we're driving investors towards more and more risk. So we just have to keep our eye on what we're creating. Not just getting through the next 6 months, but what kind of bubbles?
Carlos, if you were in government right now, what would you be doing? Is there a fiscal stimulus policy that you think you'd be putting in place? Do you think there's something realistically that could happen between now and the election?
Fiscally, perhaps a easing off on tax payments for some companies, things of that nature.
When you say some companies, would you do? I mean,
but we don't have.
Would it be reasonable to have some kind of tax policy that helps people in the hospitality, travel, and other industries, but not others?
No, let's just say you did it across the board. And then we don't have to get into picking winners, losers. The problem is that our deficit as a percent of GDP is over 4.5%. I mean, that's big. Our average since World War II is about 2.3. So, that is a big issue. It's not like we have a lot of options. We do have a trade policy, and we have to remember that after the coronavirus goes away, we're back to our trade policy, and that is also, that's what's made many of the economies soft. So that's the policy that I would address.
Well, Carlos, we were starting to see light at the end of the tunnel after signing the phase one of the trade deal. And I'm not convinced that all the global economies were, at that point, going to be downgraded by people watching. In fact, some of the easing of the trade tensions thought that maybe we'd see sort of a slow rebound from what was a headwind for 2019. And then something else you said, that we're driving people towards more and more risk. I don't know how you could explain the action in the 10-year note based on driving people towards more risk, because that's an all-time low. We're driving more and more people to safe havens at this point. Not we, but the coronavirus.
I think it's driving people. In our case, when you have interest rates that low, where do you go for yield? So I just think
There's
driving
no yield
people
anywhere. But this is just for safety, not a return on their money. It's a return of their money, not a return on their money.
You go to the stock market, you go to higher yielding instruments. I mean, you're not going to stay in fixed income. So I think that's a trend that's been happening, just pushing people towards higher risk.
But you are going into fixed income. You're going into the 10-year. That's why more and more buying of the 10-year and the yield curve.
I think this is why equities respond, right? Money goes into equities, money goes into higher yielding instruments, and I think we're going to see that. But Joe, what you said about the trade aspect in phase one. Phase one was not a big deal. Phase one was almost going back to where we were. They're going to buy some soybeans. We'll take some tariffs down. Phase one is really not taking place. It's not being implemented.
Well, it was a truce, and it at least
it was a truce. But now let's think about, and this is a good conversation. Let's think about this. It was a wonderful opportunity to say, hey, we're in a problem here. We need to collaborate. The U.S. and China. What can we do together to help out on the coronavirus situation? Should you take some tariffs down, and we will correspond with that so that you can get products at a better price? That didn't happen. What did happen is the private sector stepped up, as always. The private sector pumped up manufacturing for medical supplies, and that's been the one area that has responded. Japan has done everything possible to help China, and they don't have a great history together. I wish we would have used this opportunity to show that we can also collaborate. In the meantime, countries' protectionist instincts are just coming out because there's a pretext. We want to protect ourselves from coronavirus, so we don't want to import from that country. We want to put tariffs on the other country. So, Joe, after coronavirus and after all the damage that it is doing, because let's not mince words, this is having a devastating impact on supply chains. After that goes away and the damage is still around, because this isn't a light switch, it doesn't go on and off, it takes time, we're still going to have to deal with the trade war and an expanding trade war. We still haven't gotten to Germany. We still haven't gotten to Europe, France. So that's the part that I worry about in the future. And I'll tell you something else, Joe, over the next 4 years, maybe not 6 months. The other thing that worries me is immigration policy, because the more I talk to people, I realize that we are missing workers. We are missing talented people all the way from the top to the bottom. And that could be an issue as well for the economy, for inflation. I think there are a lot of things out of balance.
Carlos, we got to run, but I just have one final question, which is your reaction to Super Tuesday's results and what you think it says about where the Democratic Party is right this moment.
Listen, I tip my hat to the Democrats. I don't know if this is a coordinated result, but I thought it was wonderful. I think it also helped the markets respond. The idea now that it may be a Biden and not a Bernie Sanders, I think that really tempers the markets, and it's been very good.
And do you think that Biden has a better chance of beating Trump than Bernie Sanders?
Yes, than Bernie Sanders. Frankly, I would have thought that Mike Bloomberg had the best chance, but it doesn't look like an option anymore.
Don't tell us that, Carlos.
But
your predictions are getting worse and worse and worse.
That's no longer now. But you think Biden versus Sanders, I'd put my money on Biden.